All right, I think this thing is working. That is, and it's in excellent condition. Oh my god, this is heaven. I think I figured it out. I think I finally figured this thing out. All right, Ted here with Bodies and Wicks, and we're I made a call yesterday, and we're gonna take a close look at it because I think it's about to happen. I think it's about to happen. So, but before you get too far, I want you to do something for me, please, please, and that would be to go ahead and smash the like button if you want. Hit the subscribe button. We're gonna learn about some smart money today. And yeah, let's jump right into it. I want to get over. Oh, yep, this is exactly what I thought would happen. All right, so here I have my Bitcoin to have one more fall to end the month. Of course, this is all projected by smart money theory. How did I come to this conclusion? Um, click on it and I can kind of go through it. But basically, if you were to look at the monthly candles right now, all right, so September is a down month, so it's a bearish bearish candle. Then you have October, kind of exploded, and then now we have November. It's coming back down. Now, what it's doing is it's trying, even though it's monthly, it's trying to rebalance on the monthlies, right? So it's trying to, you get a monthly here, which would be the October one. November is going to be up here. It's trying to come down and touch the September. That way there's no what we call fair value gap in the middle. And with all that, I have it on the daily, so it's probably not going to move that well when I hit play, but you'll be able to at least see what's, I guess, happened so far. And the reason I chose this entrance is because it has to do with the breaker that's over here. So if we look at it in a weekly perspective, there is what we call a fair value gap. Now, that fair value gap is that gap I was talking about, except for, in a monthly time frame. If there's one left in a monthly time frame, they usually try to close up. That way there isn't a gap there. If there is a gap there, it usually tries to come back and retouch it, basically. So, as of right now, yes, I know you use cookies, you dumb thing. So, as you can see here, the weekly fair value gap is right there from this one to this one, right? And then on the daily is basically the wick, it looks like. And that is going to be your breaker, right? And that is the reason I think it's going to fall back down into here, because even when it fell, it touched right on that top of that monthly fair value gap, right? So even though it touched right on top of that monthly fair value gap, what it did, it created liquidity, basically. So because you have equal lows sitting here, right? So we have equal lows sitting there, and I go ahead and talk about it. So, it could be possible to reach as low as the breaker, but if it gets, and I may even leave a little bit more room at the bottom just in case it tries to spike through, but I don't think it will. But if it does, then what's probably going to happen, it'll float to the bottom of the fair value gap. Okay. And reason I can attest to these kind of things is because if you look at the monthly, we're going back to December last year. We're going 12 months here. If you go to December, look at January. Look at January's fair value gap. So the barely any wick here in December. And then it shoots up, but comes back down. But still, in February, it doesn't retrace much. It doesn't retrace to close that gap in between the 2 months. So therefore, you basically, this is what we call an imbalance in smart money. And anytime you have an imbalance, price is always going to try to come back and find that imbalance, all right? So as you can see, when we came up, we made that the top in May, somewhere, what was it, like 64,000 or something like that. I'm not sure what it is. But then, we came down and we had the fallback. And then we came down. I don't really know exactly how it went. But I do just remember May, everything just come crashing down. So in May, everything crashing down, came all the way down. It almost hit the bottom of the monthly fair value gap of January, right? And then moved over, to June. June was also not such a hot month, but as you can see, we had another almost bottoming out of that fair value gap. And then it wasn't until July, when July finally decided, because remember, it kind of just made this arc over, and then once at the bottom, then it just kind of took off. And that's what kind of happened. And then we had August, which is interesting. August, the body of the August candle is actually, it's just basically the whole of the fair value gap that was formed from April to June. There's a little bit of space there, but not too much, which is really interesting how that body of that candle just fit perfectly in there into that fair value gap. And so now the fair value gap has been held, right? It pulls back, decides to move up, and then see, this is here. This is September, right? And then we get October, and now we're in the month of November. Month of November is pulling back, and this is why I said I thought we would have a little bit more to fall. Now the top in November, I forgot where did I say it was. That line is 52.9446. That's the top of November. I don't think we've reached that yet in Bitcoin this month. So no, we haven't. 52.9446. We have gotten to as low as 53. So I think we're going to come down and we're going to hit that imbalance, which is, well, I think right around in here. But I looked for the daily. I personally think it's going to enter the breaker, which is a little bit below. I think that's what this white line is here. That would be the imbalance from the monthly prior in September. And then here we have the daily order block, or the daily breaker. Now, what is a breaker, you ask? If we go to the daily right now, so pull us down just a little bit. What you have in this situation, how a breaker is created, is you have a low, a high, and then boom, a lower low, right? That is what creates a breaker. This is all part of the algorithm that goes into smart money, right? So now that you have a breaker, because one of the reasons you have a breaker is because right through here, that during this 1 week, everything just kind of went right through it. Even the daily, like the daily even never came back and has touched this. Now this is what is going to act as your, a lot of people, you will use this as, support. And this is exactly why. And it has nothing to do with, hey, this is where, it touched, and it stopped here. So therefore, this has to be, the support level. No, it's the reason it's the support level is because there's a breaker there, because you have this lower low formation. which tells us that the institutional players, which is what smart money is all based about, right? The institutional players, they pressed up hard. And then so they could get everybody to buy. Everybody chased it. And as soon as everybody chased it, they dropped the bottom out and sold. Now, what are they doing? They're still holding these buy positions. Even though it went all the way up through here, they're still holding the buy positions. They have those deep pockets. Or, sorry, not buy positions, sell positions. Whenever they dropped it, I mean, you can see this candle, this one daily candle has dropped it this far. I don't even know how much percent that is. It's got to be a pretty decent percentage, at least 4 or 5. 19. Okay. Wow. Okay. If one daily if it's going to drop 20% in a day, right? You got to have a lot of force behind that. You got to have a lot of market making power behind that, right? So the people that decided to sell sold hard, and they did it on purpose, right? So, and they're still holding those sell positions, even as it even rises up and makes a new high. They're still holding those sell positions, and once it comes back down, I mean, because since they pushed up through here so hard with those buys, they still had to have those sell positions on hold. I mean, I guess in theory they could have let them go, but more than likely they still have the sell positions being held, and that's why they're bringing it back down to the breaker, right? That's why we call it a breaker. It has nothing to do with actual support or resistance. It has to do with the institutional players who sold off so hard that are still holding those sells. They want it to get back down to this area so they can release the sells and then buy. And then after they buy, then we see it move, right? So that's what we're looking for. And that's what I said last night. I said more than likely what we're going to see before the end of the month is that we will see, let's do this. Because you had it, I saw these two lows right here, and I thought that was ripe for going down through it. Why? Because that means there's liquidity here. This is going to trick a lot of non-institutional players, a lot of retail traders, into thinking that this is actual support. So whenever it came down and it came down hard, a lot of people were probably buying at this green line right here, being like, hey, this, there's support in this area, so I should probably be buying. And what did it do? Right through it. Took out everybody that was retail buying, trying to catch the bottom, and took them out. Now we have one, boom, two sets. We have it again. It's efforts on a smaller level. What's happening right now? It's falling. Right? It's falling. Looks like it caught itself. It may have hit an order block. What is an order block? All right. An order block is going to be your last down candle before your up candle. And your up candle has to close above. Or a series of down candles and up candles. So you have right here, this is where it's all taken. This is where it all is. And the algorithm remembers the price. All right. Look perfectly. That is your last two down candles before two up candles. And those two up candles close above the two down candles. So that would be considered your bullish order block. Right? And even before that happened, you had this down candle here. Oops, close that. You had this down candle here, and then this one stopped right there and then came up, and I was like, oh, it made another one. Everybody was thinking that this was going to be a second support line, I guess you could say. And it did not happen. As you can see, it pulled up. It probably got people buying, and then boom, came right back down. This is what smart money does. This is what the institutional players do. They get you thinking that there's actual support. Nope. Boom, they take it back the other way. They probably take you out with buy stops. And then this one's going to be moving up. As you can see, right now I'm on a 15-minute time frame. What I'm going to look at is the fair value gap that it left on that drop. Why? Because that's where more than likely it's going to enter and then drop again. So, oops. So right here. So from this candle to this candle, here's another fair value gap. We've already went over monthly ones. We've already went over weekly ones. Now I'm talking about a 15-minute one. All right. 15-minute fair value gap. I guarantee you, as soon as this guy, that's what this big, rectangle right here is for. This is a 4-hour fair value gap. It enters it, and as you can see, it only gets so far in, and it looks like it's going to be, doing this kind of trend, but it never. And this guy closes up. These runs, these liquidity runs, get people that are trying to go short and take them out, right? And so hopefully by the time they get back over here, now they're going to be they're going to be questioning going short because it looks like it's going to be going up. So it's getting a lot of people thinking that, it's going to be, going up. So a lot of people are buying now. They've got people on the buy side rather than the sell side. People thinking it's going to be on the buy side rather than the sell side. But it never closes above the wick. This one, even worse. These candles, they don't close above. So now you can see it start falling. You can see it start kind of like crumbling down, basically. Look, even when it was trying to come back up, it didn't even catch the full. It actually didn't even get to the fair value gap. So it looks like there's a breakaway gap here. Breakaway gap is when you have a fair value gap and it doesn't actually make it to it, and it still continues to fall. So now what I'm looking at is I'm looking at these guys over here, these two almost equal lows, and seeing all the liquidity here. Everybody's probably got their, the reason I say liquidity is because a lot of people probably have their limits set right there, right? So whenever they have their limits set there, their buy limits, as soon as it gets to that area, I'm going to assume most people probably put their buy limits probably in here, right? And then what they do is they put a short stop loss. They think it's not going to go much farther down, and they'll do something like this. I'm going to change this up a little bit, this rectangle, make it a little bit different color. All right, so this is what most people do. This is the retail way of thinking, okay? So you can see they probably have their buy limits set somewhere around in here. Wherever this is what? Here, I'll just see on the box. I'll just double click the box and give you the coordinates. 53,777 or 53,66 something. Somewhere around in there. I would assume people would probably start putting their buy limits. And then they'll probably put their stop losses just below. It's what you're taught, right? It's what you're taught as a retail trader to do, right? What you're not taught is, hey, there's this thing called a breaker down here. that it could possibly fall to. So don't don't think that this is an actual safe space for you to buy. That's what you're not taught, and that's what smart money teaches. Smart money teaches, hey, be careful with those double bottoms, because more than likely it's going to go through it. Especially if you do the top down analysis like I did and saw on the monthly that the two monthlies haven't or I would say the monthly from September hasn't touched the top of monthly of September, hasn't touched the bottom of the monthly of November. Now it can, and it's probably going to, as soon as it comes down and touches this breaker. It's probably going to come down here and touch. I mean, and then the 2 months are balanced, right? There's no need to come back and try to fill that void, right? Which gives December a very, very, very bullish possibility, right? And that's what I'm hoping for. And people, and I hate it when I see people like freak out and be like, oh my God, Bitcoin is falling, the whole world is going to end. And it's like, oh, face palm all day, because they just don't get it. They don't understand that it has to balance. It needs balance. If it doesn't have balance, then what you're going to have is you're going to have a runaway Bitcoin, right? That's going to go up to $150,000. Yeah, would that be awesome? Yeah, that'd be awesome. I'm not going to lie. But guess what you're going to have right after that? A huge crash, right? You're going to have a huge, huge crash, and people are not going to know when to get out. They're not, but if we have something like this gives us way more information that this is way better, because now that we know we don't have a monthly fair value gap to worry about it coming back in and trying to get into that, fair value gap, then we know that then December would be a bullish month. And that's what I'm hoping for. But like I said, more than likely, we're going to see Bitcoin come down and fall back into this 52,800, something like that.